Hey guys, my name is Max Convexity. Thanks for tuning into my channel. This is the daily covered caller. Let's review these covered call funds and see how they did today. Of course, I usually start with Defiance, or I always talk about Defiance, but we'll look at the buffer report. We'll look at some by Max, and we'll talk about Roundhill and all the rest of them. So let's just get started. What should we get started with? Let's look at Triple QI. Look at this. They made 900,000, which is what they're trying to make. 933. They're up 69 cents a share on the month. Oh, I forgot to share the screen. Oh no, I'm sharing the screen. Okay. They're up 933,000, 69 cents a share. Dividend's going to be 130 or $1.30 in old shares, $3.89 in new shares, 117.50, about 117% about is what that equates to. That'd be nice, right? Did you guys catch my noon update? I showed why that is. Roundhill's dividends are up as well. These funds that play in the daily volatility, they swim in the daily volatility into the pool. They have a source of income that the monthly funds just do not have. Those monthly funds are great, but to me, it's really interesting. These guys they play off at totally different volatility. Day-to-day volatility is different than what you think about when you hear about the VIX. The VIX is a 30-day projection of volatility, just an index, but daily volatility is way more volatile than the 30-day volatility. All right. Well, and you can see right here in the option price they receive. Look how vastly it varies. They received $14 today, $28 2 days ago. Okay. But then a week, 2 weeks before that, $65, $54, $50. Same option, the same methodology. The only thing that's changed is volatility has shrunk. So it's always good to look at this. I thought this might be interesting. The options market overview. It has over here the 1 day vol, but let's just look at, I need to get a little bit longer time frame here, but it correlates exactly with Roundhill's dividends, and it correlates with Defiance's dividends, and correlates with Defiance's what they earn. Okay, they earned $14 off today's option trade. Remember I said 2 days ago, right here, they earned twice as much. They earned $28. Well, this is S&P volatility, and that was a NASDAQ, but still it should be close. Basically, S&P volatility is at 18.7 today, and whereas 2 days ago it was trading around 15. The day before that, it traded at 16. So, and they wrote that option the night of this day right here. So they monetize that volatility. All right. But then they write options every day. So they wrote options on this day, and they write options even when the volatility is low. But when the volatility is higher, it gives them the ability to pay more. So remember I said that about 2 weeks before that, there was, they paid 65. Well, this is the one that paid 65. So think about that. They're selling options for 14 today. Call that 15, and we'll call 65 60 just to make the math easy. It's about a 5x difference, right? And sure enough, let's look at this index where it's around an 8, and it was around let's say a 40 was the high, something like that. It went as high as 49, but it was also 26, somewhere in that range. The median of that range is about a 5x from where we're at. So it's totally 100% direct correlated with this. So this is something interesting to keep an eye on. Okay, so let's look at IWMY now. Now these guys actually lost today. They lost 526,000. They were going for 681. And so they're only up 6 cents a share on the month. right now. They were up 23. They've recovered quite a bit too. All of these funds were doing poorly, obviously, at the start of August, and they've all recovered wonderfully. This one's lagging a little bit. Now we'll look at USOY. Now USOY trades oil volatility, and it's also up. I guess let's look at oil volatility. I think it's called OVX. Yeah, crude oil volatility. So we're going to go new pane. And now they don't have daily crude oil volatility. They don't have such an index. This is just 30-day volatilities. Close enough. But it would be more accurate if we could look at the daily, but it's close enough. You can see that oil volatility generally goes up when the market goes down also. It generally works together, but not always. But then lately, as the market goes up, volatility comes down. Well, anyway, this fund monetized some of these big days back here, and it sure shows in the dividend. Look at this. The dividend is $1.37 right now. Now, I did to figure that is I took all the extrinsic capture. When they sell an option, some of it's in the money, some of it's out of the money. It depends what time they sell it, and it's kind of a pain to figure it out, or to keep it straight, especially with this fund. But I stayed up late last night, and I think this is going to be pretty close. I'm pretty comfortable with the $1.37. I know it sounds high at 96%. I mean, I realize that, but you know, if you look at oil volatility this month, it started off at 36, you know, then it went to 40, and now it's settled down to 30. But I mean, it's been jacked all month. So I think that we would expect to see a much higher one than last month. Let's look at oil volatility last month. So there's the 31st. So the highest it was last month was on the 31st at 31. That was the highest it was. And then it was also about that much right around the first of the month. But then in between, it was just crushed. Like 23, we're trading 30 now. So it's another 1/4 lower back then. So you can figure about a 1/3 higher dividend now lately. So what did we pay last month? I guess let's just take a look at. Let's just take a look. I should put the dividend right here like I do on the other funds, the amount of the dividend. I want to say it paid $1 last month or something. I could look it up, but I think that's close. So anyway, $1.37 to be a 30% bump. That would correspond with what we're seeing in vol. So that makes sense. All right. So now let's go to, I have a new report, a volatility report, and I'm going to throw that away. Volatility report. I'm sorry about that. Okay. This is a special, something I've developed and watching for years, but it uses the VIX, and more specifically, the VIX of VIX, the VIVIX. It's kind of a pros versus Joes trending indicator, and it just shows you which side of the market that, you know, the smart money's on or whatever. And it's usually not that revolutionary. You could usually, it shows the same thing that a moving average crossover would show you, but except when it switches from from bullish to bearish, like it did back here, a moving average crossover wouldn't have caught this as soon, but it eventually would have caught this move too. So, but what this is showing you, and back here, it's showing you that traders were starting to hedge. So as we know, the market melted up all summer. Then we got to late July and it was still melting up. But then I started seeing, you know, weird things going on with the VIX, and I made the video telling everyone to hedge. Well, it's part of the reason was because of this, but or it was a big part of the reason. So let's look at this. Let's go. All right. On the bottom is the SPY with the buy and sell signals. On the top is the VIX. When the VIX is going up, when traders are buying volatility like they did right here, that tells you that they're getting ready for something, or they're hedging. So the idea is that professional traders, and that's people that trade the VIX. It's not retail traders don't usually trade the VIX directly. It's a pro trade. But anyway, sure enough, it switched from bullish to bearish like on the 17th or 18th. And that was great early warning last month. The market was trading at like 555, went all the way down to 512. Now, the bad thing is the buy signal, it didn't get you back long till it was about the same place you were short. So just like any trending indicator, this is slow, or it can be slow. It can be slow to change. So anyway, use with caution. Right now, it's signaling, it's signaling good times ahead in this time frame. I also look at it in the shorter time frame, but in any event, right now in the longer time frame, it is. And here's the longer time frame. In any event, we'll keep an eye on this every day. Okay, something else to take a look at, though, is the term structure of VIX. And it's the slope of the VIX curve between the second and the first month. When it's really steep like that, that's really good for SVOL and ZIVB. When it's sloped the other way, sloped down, like the current price is current volatility is higher than the future volatility, that's bad for the market in general. But it's also especially bad for SVOL and ZIVB, which are the short vol funds, and THTA for that matter, trade short volatility indirectly. Okay, I wanted to show something on that today. If you look at the buffer report, all the Bitcoin related assets got killed. IWMY was down, but if you look at the standouts, look at that. SVOL made more than 3/4 of a point, while the S&P, which really isn't their benchmark, but anyway, I'm going to use it for their benchmark, was only up 16. They made 4 or 5x what the S&P did. Look at ZIVB, same thing. Well, the reason is because of that, because of the steep term structure. So we'll start. I'm going to start keeping an eye on that every day, and I'm trying to make my this little volatility report more easier to look. But you can see the last time was on the 15th of August. It signaled a buy. It signaled we're going to switch from the smart money switching from being short to being long. So, and that was the SPY was at 551. Right now the SPY is at 560. So that hasn't been exactly a bad trade yet. Now we're trying to see, is this right here going to turn into an extended rally like this? This one took the SPY from 516 all the way to almost 560 before it gave a sell signal. Then it gave a sell signal at 560 and it dropped within, a week to 517. Anyway, so this is something definitely to look at, and I'll start mentioning it every day as well as the term structure. Okay, so now I want to show my new buffer report. This is my specialized buffer report. It's not really new. I've been showing it, but this is just for the single day stocks. This is a way to compare XDTE to iSPY and to JEPY. So this is the single day high yield covered call stocks and that are based on S&P. But also I wanted to throw the short volatility ones in with the two I was just talking about, SVOL, ZIVB, THTA. They're also generally bullish, and they also make money in a similar fashion, but they use a different index. So, and theirs is more related to, their strategy is more related to the slope of the term structure, where the selling option strategy every day, I'm trying to think of a way to put it, it's more related to, it's also a buy the dip strategy, because the selling daily options is fine as long as the market, it's fine the market goes down for a couple of days, as long as it bounces and comes back. It can handle that. It just doesn't, it wouldn't do well with the one-way directional market, not at all. But anyway, and lots of strategies went. Okay, well, it's interesting to see, you can see the short volatility funds, were the ones that dropped the fastest, and they still have, some of them still haven't recovered. THTA still down 5%. ZIVB is down 3.45%. And I don't believe this includes today, 826. No, I don't think this includes today. This is just as of yesterday's close. But I'll update it with the close at the end of the day, and we'll see. But in any event, you can just see it's been the month of XDTE. These guys do a little variation on the daily strategy where they don't cap their upside at night. And it's really been working out well. And it's because we've had a lot of bullish moves, up moves at night, right? Okay, just on the daily chart, there's a gigantic gap between the 5th and 6th, a big gap between the 12th and 13th, and a gigantic gap between the 14th and 15th. And then there was even one between Thursday and Friday. I don't know if you guys remember, it's kind of sold off Thursday, but then we opened way up on Friday and then proceeded to sell off. But nonetheless, that's a really good condition for Roundhill. The way they have their strategy structured works perfect for a market like we've had lately with a lot of bullish gaps. Now, like I always say, so in a bull market, it sounds great. Oh, hey, these guys are uncapped at night. But just remember, in a bear market, they're going to be unprotected at night. The cap is also the protection. So it's, you really have to know which way the market's going to know if, to know which strategy is optimum, because sometimes it's better to sell the option the next morning like Roundhill does. Sometimes it's better to sell the option the night before like Defiance does. Maybe have some of both, and then you're covered when the market's crazy like it has been lately on the upside with a lot of up gaps. But then, of course, Defiance is safer on the downside because they have higher yield. The yield is the buffer and is the safety. So something to think about. But anyway, so if you look here, the other daily fund, iSpy is up 2.6, JPY is up more than 1%. Anyway, we'll keep an eye on this, and I'll probably reset it on the 1st of the month of the next month. But I thought it was interesting, especially after this huge drawdown that we had and this huge pullback in the market, because everyone said, these, especially Defiance, but probably Roundhill too, all these daily option funds, they're too risky. Because they settle their options every day and they're just too risky. But they really aren't. That's the ironic thing about it. And I pretty much made my channel just to prove that they aren't. And that's pretty much all I talk about. But Defiance is the daily options have proved this was a great test for them. It's also a great test for SVOL and ZIVB. A lot of people said that strategy was going to blow up, when we had a big pullback. And I mean, some of them are a little slow to recover, but I mean, they're doing great, and XDTE is not slow to recover at all. But THTA has been a little disappointing, but Zega's been running that strategy for 12 years. And they have audited results. And anyway, go to their website. They shows the monthly performance. The worst month they ever had was down 10%, and it was during COVID. And this month, at one point, they were down 10%, but they aren't going to finish down 10%, I don't think. But in any event, it's interesting to go look at that fund. They've never had a losing year. THTA it's a super steady fund. They're just trying to make the same thing that bonds pay plus a little bit. Bonds pay 5. They're trying to make 9 to 12. It's just it's an alternative, and it's supposed to be more attractive than a bond. So in any event, I think it's performing, as designed. So, all right, let's see what else we have. All right, Tesla and crash trade. I haven't looked at this, but it's always the same. I think I forgot to reset it anyway, but it's made about 20% on yield, but the total return, if you had the pairs, down about 8% right now. Let's go and see if anything crazy happened to either of those stocks today. Tesla was down a nickel. I called a nickel well, yeah, it was down. Okay, it was down a nickel in points. price was that? Is that unchanged? I can't tell. It doesn't. Oh, no, there it is. It's right there, up 1.54. All right, so this was a great day. I should have updated the chart. But anyway, we can just do it in our heads right now. So, you know, one made 1.5, the other one lost a little bit, you know, so I'm going to say 1.25. You take 1.25 off 8. Right now, the pair's only down 7% with total return with a yield of 20. So that's pretty good. I'll update that and have that going by tomorrow. All right, guys. Well, I appreciate you for being here. Sorry this report was a little bit of a mess, but thanks for sticking with me. Have a good day. I'll be back tomorrow.